Hi everyone, this is Mrs. V Chan. Welcome to my Form 4 Accounting lesson number 18. Today is 11th May 2020. Okay, so we will do one DSE question for depreciation in the year of 2014. However, before we look at the question, we must go through this example first. Here comes the example on 1st of January in year 1. Okay, so we have the motor van purchased. However, this motor van has no air conditioning being installed inside the motor van, and this is the price paying for buying the motor van, and then we are going to use it for 10 years. Okay, so since it is too hot, we can't stand the heat, and then 3 years later, we install this air conditioning, and this is the price for air conditioning into the motor van. Okay, and then what we need to calculate is this. Calculate depreciation expenses in the first year and also in year 4. Alright, so let's look at the timeline here. This is in the first year, and the calculation for depreciation expense. This is the cost, and since we're going to use it for 10 years, the value going down by 1/10 in each year, so that will be 10,000 will be depreciation expense in the first year. And then at the end of year 3, we install air conditioning and paying this 10,000 into the motor vehicle. And definitely this air conditioning will give extra benefits to the motor vehicle, so that this air conditioning 10,000 should be capitalized, and it is a kind of capital expenditure, right? Okay, so how do we calculate depreciation in year 4? So since we change the value of the motor vehicle, therefore we need to calculate the net book value before we move on to calculate depreciation in year 4. Alright, so the treatment for this 10,000 to be capitalized, but before we capitalize, we have to look at the value after we have used the motor van for 3 years, so we need to look at the net book value. So here is the calculation of net book value in year 3. Okay, so I have my cost, which is 100,000. Okay, minus accumulated depreciation, so that will be 100,000, and the existing method is going down by 1/10 each year, and then I have used it for 3 years, right? Okay, so therefore the remaining value at the end of year 3 will be same as 70,000. Okay, now we can continue our story. So for this net book value at the end of year 3, so the amount here is 70,000. Right, and then now we capitalize this 10,000, so plus 10,000. So this will be the new value after we have installed air conditioning into the motor vehicle. Okay, so here I draw you another diagram, and this is the date, 1st of January in year 4. So we start a new page, and here we have the new costs for the motor vehicle, which is the net book value, plus 10,000 being capitalized, so the new cost will be 80,000. So how much will be depreciation in year 4? So here we have the new costs times. Okay, let's look at the remaining life. So how long are there here? So we have 7 years left as the remaining life. So after we have installed air conditioning into the motor vehicle, so here is 1/7 instead of 1/10. So why 7 here? Because this is the remaining useful life of the motor van after installation of the air conditioning. Okay, so this is the calculation and the concepts. Alright, so I need my calculator. Alright, so therefore the answer for depreciation expense in year 4 should be 11,429 if we round off to the nearest Okay, so here we have the question in 2014, and then we need to do this, compute the depreciation expense for the 3 years, 2011, 12, and 13. And here is my timeline, okay, and the first paragraph. Angel Company has its financial year ending on 31st December, and it purchased a machine for $240,000. So this is the costs on 1st January 2013. And using straight line method, and also this is the residual value given to us. Okay, so that is in the first year. And then in the second year, on 1st January 2012, okay, the business or the firm spent this $180,000. The purpose is to increase its productivity. So obviously, this figure will bring extra benefits. So we have to capitalize this and treat it as capital expenditure. But this has happened not in the first year, however, in the second year. And also, what do you think about the annual repair cost will be reduced? So you can see this is the benefits after you have spent this money, right? And repair costs should be always treated as revenue expenditure. And then here with no change in the remaining useful life. And now we can start our calculation in the first year. Okay, so in the first year, nothing special. So the formula for using straight line will be cost minus residual value. And since we're going to use for 10 years, so the value going down by 1/10 in each year, and this is my calculation. Oh, sorry, the costs minus residual value 4,000 and divided by 10. Okay, so this will be depreciation expense 23,600 in the first year. Okay, and then now we move on to year 2. Okay, since we have something happened in year 2. Okay, in the second paragraph, we spend this 180,000 to be capitalized. Okay, so we need to add this 180,000. All right, as capital expenditure. Okay, remember that when we add this, we need to recalculate the new cost plus the net book value. So we need to work out the net book value at the beginning of year 2. Okay, so therefore in year 2, we have this. So this is the net book value. Before we change the value, okay, we need to start a new page. We always start with net book value, and then we capitalize this. Okay, so the whole thing here is the new costs, and then we minus residual value. However, how many years left? So 9 is the remaining useful life after we have upgrade the machinery in year 2. Okay, now I can use my calculator to work out the depreciation expense. So this is the original costs minus depreciation here. In the first year, this is the net book value. Capitalize. Okay, this is the new costs. And then since we have residual value, minus. And the remaining life, yes, this is it. So that's in the second year, we will have 43,600. Okay, so finally we move to the third year, 2013, and here we have the last paragraph saying that unfortunately the machine was totally destroyed. Okay, on 30th June 2013. Okay, and then on 15 October, the insurance company agreed to pay compensation. So we will look at this sentence later. But anyway, here is the timeline. On this date, what happened? We have disposal. Okay, we still need to calculate depreciation, but not for the whole year, only for this period before disposal. Okay, so since this is straight line method, I don't need to calculate. Again, I just refer to the depreciation in the second year, so that is 43,600 in year 2. Depreciation will be same, right? Straight line method times, however, only 6 months, so that is 6/12. Okay, so divided by 2. So depreciation provided in the third year before this disposal will be 21,800. Okay, so that's all about part A, the calculation of depreciation in the first 3 years. Okay, now we come to B, prepare journal entries for recording the disposal in year 3, 2013. And here is the place for preparing journal entries. So journal, and then always show debit, credit, and $sign here, and otherwise marks will be deducted. Now this is the question. Unfortunately, the machine was totally destroyed on 30th June 2013, so that we can record our disposal in 2013, and the date for that is on 30th of June. Okay, all right, so how many steps are there for disposal? We always have 4 steps. The first step is to delete machinery. So I go to the credit side, I have this machine, which is the cost. So how much is the cost? At the beginning we spend this amount, plus in the second year we capitalize this much, so this is my costs. Therefore I have this plus this. All right, so which is 420,000. Okay, so second thing I need to delete being the accumulated depreciation account. So I go to debit side, so debit accumulated depreciation. Okay, and how do we get this accumulated depreciation account? So we need to refer back to the first year, year 1, depreciation. This is the depreciation in the first year, and then this is in the second year, and here is in the third year, right? Okay, so here we have the total depreciation being accumulated in this 3 years, 89,000. So to debit means we delete this accumulated depreciation. So for disposal, we have to receive money, but now we have some special thing happened. We don't receive money by selling it. However, we are going to receive some compensation from the insurance company. All right, so therefore we have new things here. So we debit insurance compensation receivable. So this is a new account to us, which is 210,000. Okay, so what is the treatment for this receivable? It will be a kind of what? Current assets in the statement of financial position. Okay, so finally you can see which side is smaller. So the debit side is smaller by minus this, so minus 89,000. Okay, so 1 to 1,000. What do you think? So debit profit and loss, that means we will have loss on this also. Okay, so therefore this is the shortcut for the double entry for disposal. Disposal account since being nominal, so we can skip all the disposal accounts and just work out the closing balance as either gain or loss on disposal. Now here debit side is smaller, so that we have loss on disposal, and later on we need to post this to the income statement as a kind of expense. Okay, I think that's all about this question in 2014. Thank you for watching my video. I'll see you next time. Bye bye.